Hello, greetings from Singapore and Hong Kong. And we are very, proud to be part of this Global 24-hour webathon and to support really the good cause of the future of sustainability in a disrupted world. We are all living in a very disrupted world with climate, social health, crisis around us. So today we are presenting this panel that are hosted by City Developments Limited, headquarters in Singapore, and we have we are very happy to have two very accomplished panelists, and one is actually Christina Lee, the founder and CEO of Global Green Connect and GGEF, and the other one is Anthony Cheong, who's actually the Asia representative of European Federation of Financial Analysts, the society, and both of them are very, have much insight into ESG investment and also invest in innovators and also social enterprise and startup. So for me, I'm Esther N, Chief Sustainability Officer of City Developments Limited, or CDL for short, and I'm very honored to be hosting this panel. And I think we all know that climate emergency is really the biggest threat of humanity, and of course, this has been reaffirmed by the World Economic Forum's Global Risk report earlier this year. You can see that among the top global risks, many are actually climate related, extreme weather or biodiversity. And of course, we cannot ignore the social cohesion erosion, livelihood crisis and all. And of course, about human environment, damage and also geo-economic confrontation. So today we will focus on how businesses can actually help to, find solutions to mitigate and adapt to all these risks. And the past 2 years, it was, we call it a new dawn for sustainability, or ESG. There is actually a global convergence of will and commitment towards the net zero future. And because the pandemic's lockdown has actually taught us that the health of planet, people, business and economy is really interdependent and interconnected. And last year at Glasgow, COP26, the Climate Pact, keep the conversation of Race to Zero very alive and very vigorous. And today, Race to Zero's participating organizations, cities, and businesses represent about 90% of global GDP. And for CDL, we are in the building sector, and we have actually aligned ourselves with World Green Building Council Net Zero Carbon Building Commitment as well. I'll share a little bit later, more later. And I think what has actually connected different sector, different part of the world is actually the net zero goal. And you can actually see that the financial, sectors is really playing a very major role to drive this agenda. And we have seen the setup of the Net Zero Asset Owner Alliance in 2019. And in July 2021 last year, Net Zero Insurance Alliance was formed. And November 2021, we saw another two more alliances. One is Net Zero Banking Alliance. The other one is Glasgow Financial Alliance. And bringing together more than 450 organizations representing like security commissions, stock exchanges, and service provider ratings and ranking of ESG, and of course, banks as well. And why in our industry we are so concerned about decarbonization? Because we know that we can drive change in the cities and buildings. In total account for 70% of global greenhouse gas emission, and buildings and construction alone account for some 40%. And we know very well that we have high carbon footprint, and we know that we can do something and engage our larger ecosystem. We can help to protect the planet by crafting sustainable living and also design, build, and also manage our property better. And this is what we believe in, that green building is really can help to raise resilience, not just to fight climate emergency, but also for people and for businesses and economies at large. So when we say green building, we are not just talking about infrastructure, not just talking about the concrete, but we talk about people's life. And in fact, research showed that people spend about 90% indoor. So how building users, consume their resources, how they use their buildings can make a huge difference towards a low carbon future. And if I may just share quite quickly about our business case, CDL is actually based in Singapore, started our business in 1963 with only 8 employees. And today we are operating in 29 countries and regions. Our core businesses actually include building homes and building commercial property, and as a landlord we manage commercial properties and office and retail and industrial as well. And globally we have about 140 over hotels worldwide, and we also have a fund management arm just set up a few years back that can allow us to invest in prop tech and all that to help to accelerate green building action. And our ESG strategy is founded on 4 pillars, and that will help us to deliver 3 very important deliverables. The 4 pillars include integration, because ESG will not work in silo. So we need to integrate it into the whole vertical, from the board level to top management, operation level, from headquarters to subsidiary, and horizontally integrate it with various business units and operational units, and integrate it with our own company as well as the supply chain as well. And the second pillar is innovation. Today, risk management is not important, it is not sufficient. We need risk adaptation. Without technologies and solutions, we will not be able to move the needle fast enough towards the net zero future. And then the third pillar is investment. We have to invest in resources, invest in people and technologies and solutions in order to achieve a low carbon and sustainable future. Last but not least, the last I is about impact. Everything business is managed will have an impact, whether positive or negative impact, to the direct stakeholders or the community and the planet around us. So for CDL, our 3 deliverables are very simple but tall order. First one is about decarbonization, and that is also why we push our agenda about green building for more than 2 decades now. And we need to set really ambitious targets to drive and expedite action. And that's why in 2018 we have actually secured the SBTI, Science-Based Target Initiative, validated greenhouse gas reduction target. At that time, it was aligned with 2-degree warmer scenario. Last year, in December 2021, we have raised the bar to align it to 1.5 degree. And all these will help us to be on track to achieve net zero by 2030 for our new developments and also buildings under our direct management and control in Singapore. The second D is digitalization. That applies to innovation, AI, and all the technologies that we can deploy to help us to build better, manage more efficiently, and also engage our building users, tenants, together to decarbonize our overall consumption. Last D is about disclosure. Whatever we do, the impact is there, and we need to look at how to disclose it and communicate with our investors and stakeholders at large. This is actually our value creation business model. Starting in 1995, our ethos was actually conserving as we construct. And over the past 2 decades, we have actually embraced the best practices using the integrated approach, that is to look at ESG through the financial and business lens. And apart from green building, we also look at how do we disclose, and communicate, and how do we future-proof our business. We established a sustainability blueprint. We called it Future Value 2030 in 2017, and we actually rolled it out, and now we are tracking our performance and make sure we are on track towards a net zero carbon commitment by 2030. And reporting is very important. You can see the bottom of this model is actually GRI, CDP, GRESB, and SDG, TCFD, and all that. And so all these are helping us to harmonize standards to to communicate clearer and better to our multi-stakeholders. And you can hear that a lot of companies and even investors are committed to Race to Zero. So what we believe in, we have to be specific, we have to be clear when we set our targets, and we also have to regularly, promptly update through ESG disclosure. Otherwise, you will be deemed as like greenwashing. And later on during the panel discussion, our two investors will talk about, their view about greenwashing as well. So this is actually our framework that we pledge to support the World Green Building Council Net Zero. And you can see that we have very specific, even total floor area and how many, tons of our carbon emissions are all clearly specified here and also posted online on the World Green Building Council website. And we have also committed to the scope of 5 action. Apart from committing, we also disclose it regularly on scope 1 and 2, and we also embrace the scope 3 as well at Glasgow last year. And we commit to action and validation, and also advocates to a larger, ecosystem. And we look at impact, not just about our business impact. And we always look at green building as an investment, not as cost. And we look at the returns that can create business value for our company, for our stakeholders, supply chain, and also most importantly is for our community and the planet. And what we are looking at is, aligning with our, practices with global standard. And this is our report cards that we are aligned with the top ESG ratings and rankings, such as Dow Jones, sustainability indices, MSCI ESG rating, which we have achieved AAA since 2010. That was 12 years ago. And we are very honored to be the only CDP A list for climate action and water security, and also on the Global 100 ranked top among all real estate companies since 2020. So all these can help us actually to tap into the fast-growing sustainable finance, ESG, investment funds, and all these. My two panelists will help us to elaborate on it a little bit more. And we wrote out the first green bond in Singapore in 2017, and since then we continue to actively embrace sustainable finance to accelerate green building action. And today we have actually chalked up about $3 billion worth of sustainable finance and for innovation and all. And we also believe in giving back and educating and the community. This is one of our 3 national platforms that we call it the CDL Green Gallery, which is located at the Botanic Garden. We host events and climate-related and botany-related exhibition, free entry for public and for everybody. So for us to help to educate and influence the public. And we also have a Sustainability Academy, which is also zero energy building, to engage industry, engage NGO partners and the 3P partners to learn more about everything about net zero, SDG, and green buildings and all. And it's also a base that we engage Youth for Climate initiative, as well as Women for Green Network. And last but not least, we do believe in educating children when they are young. So this is actually the world's first green library that we actually partnered in partnership with National Library Board, we call it the My Tree House, and engaging students from 3 to 12 years old. And we believe in nurturing them from young to become our equal, hero of tomorrow. And last but not least, the triple bottom line will see an additional dimension that is about purpose, because we believe that embracing SDG and sustainability will add purpose to business and help us to build a more balanced and a stronger triple bottom line. After all, without a healthy planet, we don't have healthy people and market for business and individuals to thrive. So with this, I would like to, pass the stage to Christina to talk about, how she, as a startup and impact investors and accelerator, how she can help, to contribute to the resilience of our planet and people. Over to you, Christina.
Thank you so much, Esther. Well, I mean, like, no questions. CDL has a lot of contribution into building a sustainable future, not only in Singapore, but globally, and truly impressive. And I would share some slides, to share a little bit of our Global Green Connect, our short journey in sustainability space compared to CDL. I think we are still quite young. I'm the founder and CEO of Global Green Connect, and let me see the slide. Okay, so we are a sustainability ecosystem. If you look at what we offer, we can summarize that we offer sustainability training and also consulting into business. However, within our group, we also have a purpose-driven social enterprise that is focusing on empowering youth and women, game changers in the sustainability area. And currently, we have our academy that is offering training to bridge the gap. I'll come back to this a little bit later, but also through our education, we have collaboration with United Nations Institute for Training and Research that roll out the SDG Open Hackathon, which is a SDG education among young people. We also have a Women Eco Game Changer Award, which is a awards that launched first one in Asia to give recognitions to women who use innovations to improve or tackle social or and environmental issues. And we also have a collaboration with CDL, RAISE, and UNDP that we are the operator of a incubator in the CDL building to foster impact startup. So in a nutshell, everything that we do, we eat and breathe sustainability. So when we come back to how we can contribute to the sustainability, build a more sustainable future, these are the problem statements that we're looking at, because today, whether you are CEO, CFO, investor, HR person, or even as chief sustainability officers, we hear there are a lot of questions about sustainability. I think the panelists, Esther, Anthony, and myself, we embarked our sustainability journey relatively early. And I, as an entrepreneur, I always joke and I said, I probably started my business 8 years too early when nobody really talked about sustainability or ESG. But now it's a buzzword. And you hear investor ask about all the acronym that Esther just mentioned, with all the report, the frameworks, they get all very confused. And even you have a board member that they don't feel comfortable to sign off the ESG report. Or you have managers in marketing department that they said, we don't know how to avoid greenwashing. They just do their job, what they were told. So we believe that, how are we going to build a sustainable future together? We really need to come together to educate and learn. And sometimes we probably need to unlearn and relearn to build a different, what I call the new era, in a sustainable business. So for Global Green Connect Academy, we are bringing together sustainability practitioners to train practitioners. And I think in that note, I want to say that we share very similar visions with Singapore Sustainability Academy, which is what Esther mentioned earlier. And in January this year, we formed an alliance called Sustainability Connect. Basically, we bring together all the partners who are like-minded, and they are experts in different sustainability vertical. So we bring them together to provide training and close the knowledge gap, which is all the questions or the problem statements that we brought up earlier that we would often hear in the market or in the boardroom. So this is Sustainability Connect, and we believe in collaboration. So today, that's why we are having this webinar today that CDL supports for the Globe Scan for building a resilient future. And in terms of our work, apart from what I just mentioned about training, about educating the next generation, or even empowering youth, we also work in a sustainability journey through our consulting work walking along with some companies. I think there are a lot of talks about reporting, which is very important, but I think reporting come much later. That is more reflecting the result. But where to start? How are we going to address all the questions that from different departments that they have? So we come up with a sustainability journey by providing various resources and support. And we don't work alone, simply because we believe in collaboration, and which is something that I show in my previous slides when we would, grow and empowering each other and amplify the work that we do. And also when it comes to investing, I think Esther mentioned earlier that, we are also into this space. We are not running a fund, but we do have our family office that we're looking into closing the gap and empowering some of the innovative solutions come from the startup or even very early stage students program, that when they come out, that they start their impact business, whether they are social enterprise or they are just pure impact solutions. So we are here to help to bridge the gap. There are a lot of investors in the market, but I think it is still a time where they're shifting into the impact or ESG investing. It is a journey, it will take time, and we're going to talk about greenwashing later on, why it's still, even investors still need a lot of education before they moving into that space. So yes, to this note, I just want to end with a quote from Tim Cook that I don't think I need further introductions. If you're an executive who has not developed an innovative strategy to address your impact on the climate, then you are failing in your duties as a leader. So we believe that not only the current leader needs to think differently, but we also believe that we need to foster our future leaders to think sustainability as a tool and power to build a resilient, peaceful, and sustainable future. Thank you very much.
Thank you, Christina. Yes, precisely. We all need to take a long-term view. And of course, solutions, technologies, resources, we need support. And at this juncture, I think the best is like to hear from the perspective of ESG investor. We need the big boys to make the decision, to help us grow and, grow towards actually sustainable future. Over to you, Anthony.
Thank you, Esther, and thank you, GlobeScan, for having me to serve in this session. Now, allow me to share screen, and I'm gonna, in the next 10 minutes, I would like to share with you my 2 cents about the latest development of ESG in the investing space. I think just now, the previous presentation that Christina shared with you all have given us an excellent overview about impact investing, and secondly, the big picture about a huge funding gap that is needed for the world to transform in terms of all the sustainable investments that we need. By the way, the initiatives that GGEF has been organizing for years has been creating really positive impact to the local community. I myself have been supporting the Women Eco Game Changer award for years, and I think it's really great initiatives. So here I'm going to share with you all about some of the latest developments of the ESG investing space. Now, I'm sure many of you has come across with these terms, right? The likes of CSR, corporate social responsibility, and in fact, when I was first involved in ESG investment, it wasn't called ESG back then. It was called SRI, socially responsible investing. And now we have all the new acronyms about sustainable, responsible, or impact investing. They are slight technical differences, between all these. We are not going to go into all the details, but what I would like to share with you is that what you've got to see here on the left-hand side is how corporates in the last few decades tried very hard and in their own efforts in defining their sustainability journey. Now, on the right-hand side, obviously, is the financial markets. That's the investors, the asset managers, the investment banks, etc. How they see, sustainability. And funny enough, like both of them are trying to do all these good deeds, but they are not exactly on the same, wavelength or languages. And the great thing about the emergence of ESG is twofold. I would say one is because it's basically allowed the capital markets and also the corporates, to be align on the same page, on the same platform, so that we are communicate in the same languages. And secondly, I'm sure, you guys will all laugh about it, but being a financier or investors, we always have a problem of quantifying every single, ideas and metrics. So I think the financial markets have created a lot of KPIs and metrics that help shaping or help corporates to measure and benchmark what is meant in terms of the milestones they have achieved on the sustainability side. So in short, this table would have basically called, the development of the corporate side and the capital market side in the last 20 and 30 years. Now, I think one of the key things that I always would like to stress is that for investors like us, it is actually a long journey. You guys have just heard Esther shared about CDL journey across the decades, on what they try to help in terms of the global environment and the community. In fact, for investors, there's also a long journey. So I think we have to be very pragmatic and realistic about, first of all, where we are, and secondly, where we want to get to. So if there's one slide in my deck that I want you guys to have takeaway with, will be the one. So basically, I am putting it like a traffic light approach. You're seeing that like I'm nicknaming, investors from level 1 to level 5, but pretty much investors always starts with screening. And I think that has to do with the development of ESG investment in the past. A lot of money actually came from a church or faith organizations, and as a result, they have got their own way of defining ethical investment. And that's why you also come across the term of responsible investing and that's how it evolves from. So screening, scoring, and rating are always the first thing to start with. Asset managers, when they first look into sustainable investment, they were thinking about, what are the bad guys that I need to remove or take away from my portfolios. And as a result, there's a lot of filters. And in order to make it even more robust and systematic, hence there's a lot of data and scoring and rating involved. Now, that's obviously, depends on different jurisdictions and markets. Admittedly, Europe has actually developed that in a much, having a much longer history in developing all this. So they've done that earlier. In Asia, I would say that a lot of asset managers I'm seeing are basically now starting to deploy or invest into this kind of scoring and rating tools in order to help them to make a better investment decisions. Now, in order to move on from like the early stage to level 1 and level 2, there are a few ways of doing things. First of all, when you look at level 3, you saw the word thematic. Now, thematic is very easy to understand. So think about funds that invest in electric vehicle, renewable energy, or smart cities. You would hear a lot of different funds, especially these days. There's a lot of ESG funds or funds that's claimed that would, trying to deliver financial return and also environmental and social objectives, right? But thematic funds, one thing that we have to pay attention to is that these thematic funds are usually very sector focused. So for example, they always invest on one particular sectors, and in one sense, it's actually good for sustainable investment because it's like gathering all the assets and deploying it or focusing on one particular theme or sector, so that it actually helping in terms of the financing part of the development or acceleration of those sectors. Now, on the flip side, I think it's fair to say that from an investor point of view, imagine you put the money with that particular fund. Obviously, those funds concentrators on a few sectors may do extremely well in 2 to 3 years' time, but at the same time, because it's very sector focused, it tends to be concentrated on risk profile. So the risk return profile tends to be a bit more cyclical. So I think this is one thing that I want all of us to be paying attention to. Now, beyond thematic, which is actually to do with product design or product development, in order for asset managers to mature across the curve, there are two things that a lot of investors would be exploring into. The first one is engagement. So engagement is actually via the portfolio holdings to have an active and constructive dialogue with the companies. I'm sure, Esther would have done a lot of calls or dialogue with investors for years already, because they're very experienced in that. I think it is a fair point to say that even within the Asia Pacific region, more and more companies are now having this kind of ESG related roadshow or specific calls that dedicate the time focusing on that. And on the investor side, we call it engagement, because not only because we want to try to identify the company or stocks that give you the best return, but at the same time, what we care about is the ESG performance and return of our portfolio. And as a result, the stock selection process and the dialogue would have involved in this engagement. And obviously, the second part is for some companies who are relatively in the early stage of their ESG journey. From the investor point of view, we would be able to share our insights or 2 cents about, or the industry latest development or best practice with them, so that, everyone could actually exchange those ideas and move quicker. The final level 5, I must say, is very hard to do. It's called ESG integration. So literally what it means is that if you see a lot of asset managers, they will have an ESG team who are like the specialists of doing the ESG work and the investment team, right? For full ESG integrations, there are actually no 2 teams. There's only 1 team. And the portfolio managers and analysts are actually all equipped with the knowledge and expertise of all the ESG analysis needed, and they fully integrated the ESG analysis in their investment process. So by the time that the stock is actually being part of the portfolio, all those considerations has actually been taken. So I think this is the obviously, there will be a handful, I would say, of of investors or asset managers that are going to that far, and especially in this part of the world, it would be even rare. But I think this would be the ultimate goal that more and more institutional investors would like to get there. So to move on from ESG in the investment space, I think one of the key things that I would like to share here is that a lot of people in the past few years were still questioning, so when I'm investing in good, am I sacrificing any of the investment returns? And I think I'm actually glad to see that there are less and less people asking about this question, because it also shows that people emphasis and focus on investment has also been more multidimensional. They look at things that beyond pure financial returns. But I would like to bring to your attention to these 2 charts. So the upper chart that you are seeing is actually, we're using one of the biggest index companies in the world, MSCI, and we are focusing on emerging markets, which including Asia, ex-Japan, emerging Europe, including Eastern Europe, and also Latin America. You would be surprised to see that if you invest in the blue line, i.e., the good ESG companies, since 2011, we are literally talking about just more than 10 years, a decade ago already. Investing in good ESG company has actually quietly outperformed the wider emerging market indices. And interestingly enough, if you and we actually have the actual numbers here. The good thing is it's not just outperforming in the bad when market struggles like during the COVID times or tricky times like recently or in 2015 and 14, as you see in the chart. It's actually outperforming in the good years and in the bad years. So I think from a fund manager's point of view, I can pretty much say that for a managers that will be able to outperform 3 to 4 years, that puts him on top decile, the top 10%, right? This, by investing in good, you know what, you actually outperform emerging markets for 10 years in a row. So it's actually tells you, you know, the secret recipe of a very smart fund managers. The bottom chart is a very famous academic study. It's mostly quoted basically when we talk about ESG investment, and it's a meta-analysis of over 20,000 studies looking at the correlation between the ESG performances of a company with the corporate financial returns, including share price. And again, you'll be seeing that there is the positive correlation and the negative ones for. So if you do good, there's actually positive correlation. But one thing, again, I would like to highlight is actually on the very right-hand side of this chart. You will see that again, it's the emerging markets. So basically, if you're companies within EM and you do well in terms of your ESG performance, you know, all these studies are telling you that you have even a higher correlation, or actually higher than that of Europe and a lot of North America or other developed markets, that you would have a better corporate financial return. So these are additional charts that we are seeing, whether you look at emerging markets or we use MSCI World, the message is actually very consistent. So I think, you know, all in all, I think it's a very quick summary would be to take a step back to look at the core themes of today's sharing. It's about building resilience. And I think one of the things that, as I've walked through with you all about the stories of how to getting, you know, across the growth trajectory of full ESG integrations and the merits and outperformance of it, I think the key part now is about tackling, you know, the shortfall, which is the ESG talent. So you can see here, there are a few pointers that I would like to share. I'm sure, you know, we all appreciate that, you know, business resilience and recovery is something that we all, is much needed in, you know, every part of the world, right? Post-COVID and all the geopolitical tension. And in fact, you know, the increased focus of ESG is actually a very important solutions to it. In order to do that, I think it's a fair point, and it's particularly relevant to this time zone, to the Asia Pacific market. That's, yes, indeed, we admit that there's a huge gap in terms talent gaps in the sustainability area. Again, we are going to touch on more on greenwashing and other issues later on, but the talent incubation would be a very important part, not only for investors or financial institutions, but also for corporates. And finally, you know, the ESG knowledge is needed, I mean, across, you know, multi-industry, multi-sectors. And this is why, you know, I'm sharing on behalf of FAS today, because FAS is it's a little bit more with the history, you know, since 1962, but it's a European-based, you know, industry association that has been across decades putting a lot of efforts in terms of, you know, ESG investment and analysis. And they are also the one who have rolled out the gold standard in ESG investing, which is the Certified ESG Analyst Program. I would be able to share a bit more, maybe later in this sessions, in our discussions and Q&A sessions. Thank you.
Wow, wonderful, Anthony. This is really, really good. And I think the takeaway I have is like, really it's possible to do good and do well at the same time. And now we have a little bit, sort of 20 minutes to really cover a few big issues. So now the first question first is like, we are really living in a new business as usual. You know, it's really a change business of usual, a new norm, a very disrupted world that, you know, surrounded by climate emergency, global pandemic, wars, geopolitics and all. So just now you talk about, yes, you can do good and do well, invest and get good return responsibly. So maybe what I will do is like, let you take a short break first. I will ask Christina first. How about in the impact investment world? Investors are also taking this view that you can do good and do well and supporting, you know, innovators or startups that can contribute to a sustainable future. Christina? Yeah.
Okay, hey, thank you, Anthony. I feel very encouraged, you know, like looking at all the slides, you know, we always hear about that, you know, but it's nothing can be stronger than looking at those charts, you know, and the data. I think, you know, maybe we can talk about a little bit on the impact startup. I see the impact startup almost on a daily basis, and I think the biggest challenge is still the funding gap. I mean, as much as we have all the data to show that it is possible to do well and do good, but I'm afraid, you know, the Milton Friedman framework is too deep-rooted in our systems, you know, especially probably in the Wall Street to the Main Street. And it's very hard for us to get investor head around ESG. And I think the missing gap is really the knowledge. I mean, of course, there's no issue for me to talk to someone like Anthony or even Esther. But broadly speaking, when we sit down with, you know, bring the startup, go to talk to any investor, whether it's VC or even family office, they often struggle to put their money to write a check. But if we can just bring any, you know, startup, you know, it could be metaverse, NFT, you know, blockchain, anything that is so hip and a lot of, you know, media cover it, then investor would say, okay, I'll write you a check. I don't quite understand what NFT is all about. So what I'm saying is this is the reality. And so I think we need to collectively as an industry, we need to step up. We need to, through education on even, you know, from media. I always, you know, I came from, you know, 17 working for international media. I often go back, you know, to media and talk to people that I probably couldn't speak to when I was working on the business side, because there's a big China wall between editorial and business. And now I go back and I don't have the China wall between us. And I would always want to educate even media, because I think sometimes when we talk to media, the editorial team, they, as much as they want to cover, but they are not talking to the right people, or they are not getting the right information. I think that's also a big gap. So this is my observation, you know, among from an investor or impact investing, you know, perspective. But I also see there are a lot more innovators or startups are going into impact, which is, you know, aligned with all the 17 SDG goals that just behind Esther's background. So especially the young people, I think they all know that they want to, if they want to become entrepreneur, I think they are not only focusing on making money, but they really want to look at, you know, making impact, just like, you know, some of the incubatee in our incubators for SDG. So, but how are we going to bridge the gap? How are we going to, as an industry, that we can come together and propel or maybe accelerate, you know, all this movement? Because like as I mentioned earlier, that there's an urgency. So it's not just, you know, getting the good return, being patient investor, but, you know, how are we going to all step up and close the gap, funding gap, and also push out more innovative solutions and make it all possible and, you know, in a very quick manner. So I think this is all the work and challenges that we're facing every day.
Great. Thanks, Christina. So we are all living in this still so-called new normal. And just now you mentioned, Anthony, about like, you know, the ESG funds really outperform their ESG, counterpart. So do you see this surge of ESG funds will be really channeled, to support good action and that can create positive impact. Will some of all these ESG funds will be, supporting, the impact investing as well? Will they go hand in hand that let's all build a sustainable future for everyone? And well, in recent weeks, there have been, we have been hearing a lot of naysayer also, some, call ESG, a spam and all that. And I think, so how can really investor and financier really sustain this trend of responsible investing rather than a fad that, that it come and go, and I hope that it will be a long-term, trend. And in your opinion, will this ESG investing or responsible investing here to stay? Yeah.
Sure, thank you, Esther. If you ask my honest opinion, I think ESG investing would be definitely staying. We know that we have been obviously we have been talking about that for years, and we are just seeing this a trend become all of a sudden to become very fashionable in the last maybe 12 to 24 months. And we are seeing a lot of inflows going in. However, I actually feel that things will be a bit more structural than we would have expected because of a few reasons. There are push factors, obviously, that there are more and more regulatory requirement and expectations for the fund asset management industry to do that. There's also pull factors. There are more and more investor demand. There are a change of demographics, and the younger generations would always favor, investing with purposes. But I think also, if being a practitioner myself, I actually my observation is that literally every organizations have to reflect and reshape their own purposes, and asset managers inclusive. So what I'm seeing that the stars are aligning because there are all the push and pull factor, and the practitioners are also rethinking. But at the same time, the issues on environments and social, or even some of the governance issues, are actually quite structural. And we know that it's not going to be resolved in a year or two. It would take definitely, more than a decade to have it to make progress. So as a result, I think that's why that ESG investing are here to stay.
That sounds really good. But what can corporates do, to play a bigger role, to tap onto the ESG funds, and also, be part of like investing for, in good, in a good impact innovator and startup. Anthony, you want to continue that, how corporates, what corporate can do? Yeah.
In fact, there are a few things. Here we talk about in terms of both corporates on the investor side, there are a few things that investors and corporates could focus on, and obviously the importance of positive change and impact, as Christina has already covered. But at the same time, we need to look for ways for partnerships. So partnerships including partnership with your stakeholders, your customers, your community, your investors. So I think this is, and the focus here is actually, the devils are always in the details. So if we look at the footnote here, it's not just the financial performance, but non-financial performance. I think that's one thing that when we talk about partnerships and collaborations, it's about I won't say shifting focus or switching focus, but it's actually having focus in parallel. Okay, I think that's part one. The second one is definitely upskilling and equipping the staff, and even at our for investors like us, we are equipping our portfolio managers and analysts in really understanding the importance of ESG, and not just the concept. I think we are beyond the awareness training stage. It's really about the actual skill set. So some of the examples given here, which is actually covered by the Certified ESG Analyst Program, you could see it's actually very all-rounded, right? I mean, there are 10 modules in total, and also talks about regional and international development. But key topics like ESG data, reporting, regulations, how does it apply across asset classes. It's also touch on Christina's expertise on impact investing, and and also in essence a very important part of how to integrate the research of various ESG factors, which is a very broad range, and how does that having an impact on the financial analysis and financial performance of companies are all very important topics and skills that we should master. Probably very important skill set that we need for in the coming years and decades.
Mm-hmm. Thank you, Anthony. I think, yes, you are very right that, because of this sudden surge of, ESG, every company, or whether it is on the buy side, sell side, or corporate side, everyone is setting up a sustainability team. But the fact is, in the market, there are not many, sustainability professionals that have hands-on experience and knowledge. So that was also why that Christina and myself, actually, with a couple of other partners, that came together and set up this Sustainability Connect. And how can we, help practitioners, to really obtain usable, practical skills that they can learn something that they can actually practice in their own business and in their own work. And to counter the so-called, we call it like sustainability, washing, is like everybody is a CSO. So how can we ensure that in, your area, Seska and Christina, Sustainability Connect, how can we work together? Maybe you want to share with us a little bit of your plan to promote Seska in Singapore and the region. Christina, shall we?
Yes. Well, it's a very exciting collaborations that we're going to embark, because as Anthony just mentioned about EFAS and also SECA, that is taking professionals into another level of understanding ESG. I remember when Anthony first introduced to me that SECA is like CFA for ESG, and I said, wow, that's sounds really good, because now we can put some standards into the assets allocator. I think that's very important. And for Sustainability Connect, which is a collaborations of all that is led by the Singapore Sustainability Academy and Global Green Connect Academy, that we are very privileged, to bring the exam into Singapore officially starting from September onwards. And actually, we pilot the exam in Singapore since December last year. And there's some uptake, but I think it will make the exam and the whole process a lot more smoother if we can put the prep course in place, and which is something that we're going to collaborating with Anthony and the team to bring the prep course into Singapore and exclusively put it into the Singapore Sustainability Academy. And the exam will also offer to other regions, including Malaysia and Thailand. So so I think it's very exciting, because I know it has a long history, especially for EFAS and SECA in Europe. But in Asia, I think we all are very excited about the topic, but how are we going to do it? And I think we all go beyond the why, because everyone understands why we need to do it. But I think now is really the how, and what we're going to invest, and how are we going to acquire the skill set, and make sure that what we're going to invest in will be able to align and align to the whether it's family office or assets allocator or investors objective, and yield a good result. So it's super exciting. So we're going to have some announcement coming out soon as well.
Yeah, stay tuned. I am very grateful that the SSA, the Singapore Sustainability Academy, and also from Christina, the GGCA, I have been helping on this really good initiative. And more importantly, I think this is one of the good exemplar of collaborations and partnerships. And we want to helping the whole the region. When we talk about building resilience, this is one way of we try to walk the talk. So thank you, Esther and Christina.
Well, I
Thank you,
think,
Ashley.
yeah, you are very right. To build a sustainable future, we need all hands on deck. And we also need a very clear alignment. I always say that, yes, there are a lot of acronyms, but they're only ABC. I want you to, I want everyone to register. A is about alignment, because every business has to align with the global goals and also, national goals as well. And then the second one is about business case, because we are all running a business and you have to really sustain your business financial viability so that you can return value to your investors and maintain, provide employment, to your own staff and also the supply chain. And C is about collaboration. No one person can change the world alone. So collaboration is very important, but it also boils down to communication, because no two person will think alike. So the Sustainability Connect, that is actually the fundamental of it. We want to bring people together. We want to connect people, and we also need to communicate with each other. And I think SESGA is very meaningful that, corporate needs to know what is doing good. And we also need to know what analysts are thinking, what analysts really want corporates to report to them. So I think, definitely this collaboration is really good, like NGO or, an accelerator like Christina came into the picture to help to raise the level of awareness and knowledge. Mindset is very, clear now that everyone know that, hey, we have to change, but it's a skill set, it's a knowledge. So, Christina, since we are talking about the Sustainability Connect, and do you want to share a little bit more about the training, initiatives, that you have, big plan in mind? Yeah.
Wow. I think there's so much knowledge gap in the market right now. It's not only for the sustainability department, but also I think whether, ranging from green finance to operation to the supply chain, even marketing and boardroom, there's so much knowledge gap that needs to be filled. And surely, there are a lot of academia that could come, with the knowledge, but I think for time is essence. So I think now we probably need to bring on more practitioners who got experience, hands-on experience in the market to close the gap. So for Sustainability Connect, I think, well, apart from, SACA, that is a program that we're going to bring on into the market soon, we are also looking at some building sectors program that we want to bring the training into upscaling all the professionals in building sectors. This is also CDL and SS, forte. So I think this is where we're going to bring in those practitioners to train more practitioners. Apart from that, we also have a lot of program focusing on SME, because in Singapore context, we're going to have the carbon tax kick in 2024. So I think that will be a big shock to a lot of SMEs especially, I'm sure you all hear that looks like external environment. We are going into a winter. So while, SME need to keep themselves warm, make sure they survive during winter, but I think also it's very critical for them to transform their business to deal with, carbon tax and other external factors. So I think for a company to transform themselves and integrate ESG into the business, that presents a lot of benefits. And especially with the banking system in Singapore, that they are very ready to help SME to transform. And their green loan, green bond, all that are available, but if the SME they don't know how to transform themselves, I think that will present, a lot of challenges for them to face or continue to run their business ahead and sustainably. So I think we are here to hear proactively hear what's the challenges in the market, and we are hoping that we can provide help through our training as well as the consulting services to make sure that we all will be around to do well and do good together.
Wonderful. And this is a really good, positive note from Christina. So now, Anthony, you have the last word, well, in the last 2 minutes, that resilience is really key for, for long-term survival for countries or individuals or business. What is your wish for the victims who are suffering from political or social unrest? And, how, the last thought from investor, how you can really help to create positive impact and to help all these victims to build stronger resilience. Yeah.
Yes, indeed. I think despite we are all based in Asia, what's happening around the world, especially, I'm sure you guys, we are, it's very close to our hearts, and it's very disheartening about some of the latest developments. I think it's very important that in the recovery and the resilience, what we needed is actually focusing on, as your virtual background, the importance of the 17 SDG. So from the investor point of view, I think one of the things that, and it's also would be when we talk about the future of ESG investing, next era of ESG investing, I actually would argue that SDG aligned investing would be a quick solution to it. Now, in the past, I must say that SDG is, obviously very colorful, very easy to convey, like wonderful tools, when, for example, Esther, you are preaching those good words within the corporates or across the corporates. Now, in the past, the tricky part is how to benchmark it and measurement of what does it mean for SDG enhancement, how to quantify it. Now, I think that these days there are a lot of efforts, and also even at my firm, internally we have conducted research about what's the right way of SDG benchmarking. So I think we are now getting the tools ready for investing in SDG enhancement. So it's about the positive change on SDGs that we want to bring about. Obviously, it would be very country focused and community focused. There will be different SDGs that will be more pressing or more relevant to them. But I think that's the right direction to go.
Wonderful. What get measured, get managed. And well, with this note, I would really want to summarize it. No one, can change the past, but with collective power, everyone can do some things to contribute to a more peaceful, inclusive, and resilient future for everyone. With this, thank you, and all the best, to any victims that it is suffering from political, social, or climate unrest. Thank you.
Thank you.
Thank you, Anthony. Thank you, Christina.
Thank you, Esther. Thank you, Anthony.
Thank you. Thank you. Thank you, everyone. Thank you.